George, good to have you here. You heard Phil, but you kind of break down the delivery numbers. We got whatever you want to call it, a 10 or 15 or 20,000 unit beat relative to forecast. And we got 50 billion in market cap added this morning, and the stock is almost at your target of 293. So how should we be thinking about the what's already implied in Tesla's market value, and where do you think it can go?
Look, Tesla for us is an incredibly powerful long-term story. As we've talked about over the last 6 months, they did something that was pretty smart, in our opinion. They cut prices to stoke unit demand in the hopes of, over time, increasing the penetration of their FSD software. Right now, that FSD software costs $15,000, and we estimate that globally it has about high single-digit penetration rate. Over time, we expect that to get a lot higher, and we're in print saying that we think that the company should probably lower that price from $15,000 to probably something like $10,000. And so when you think about what that does to the margin profile of the firm over a long-term period, it's huge, right? Right now, as Phil alluded to, the company broke its promise, and its margins, its auto gross margins were below 20%. They were 18%. Now those margin expectations are subdued for the rest of the year. We think there are some tailwinds even in the near term because those price cuts kind of stopped over the last couple of months. But over a long-term period, if they could increase that penetration rate of FSD software, which is real-world AI, the margins of the firm should go a lot higher over the next 3 to 5 to 10 years.
But the fact that when it comes to Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
It's a great question. We've known about it, and we seem to be getting a lot closer to this actually hitting the penetration rate that will stoke demand even further. But importantly, I think the stock got to $100, not because people were concerned about AI, but they were concerned about vehicle demand, right? So right now what we've seen is expectations came down quite a bit in the winter of last year. Since that time, Tesla cut prices. It's worked. They've gained unit share. They've got their footing back. And what we've seen is the pendulum swing way too far into the negative camp. And right now, not only has demand stabilized, right? Margins could get better over the next 1-2 quarters. And like we just talked about over the long term, we have the Cybertruck being released at the end of this year in small volumes. And if you look out a few years, there's a lot of earnings power here. A lot of the stocks that we talk about in our group don't really have earnings power. We cover sustainability. These are very young companies, but Tesla, who we term the sustainability behemoth, has real earnings. And if you compare it to that group of stocks that we call the Man Group, the 6 large cap tech companies, it's incredibly attractive for the growth. And it always has been. I mean, when we initiated on the stock last year here at Canaccord, the discount was even more. And today it's narrowed a little bit, but the stock has underperformed the Man Group on a 1 to 2 year basis, and we think that has a lot more room to run.
You've mentioned, George, the margins several times, and obviously they did sort of underperform even their own target. At what point, though, does that become a concern if they don't begin to improve it? I know when you're looking at growth, sometimes margins can be overlooked, but at some point, you have to want to see that build.
I think you have a really good point. And so far, so good on Tesla's strategy of cutting prices and improving unit volume. But the razor blade model that we've talked about, selling units and eventually selling the software, we don't know yet. I mean, if it doesn't take off, this AI software, if the FSD software over the next, call it 2-3 years, and they don't get that margin boost, then it wouldn't have been as successful. We think it will. We think it adds a lot of value to consumers and to the world in terms of sustainability. But the jury's still out. We have to see if it happens. We're making the bet that the company has an incredibly powerful software suite, and that penetration rates will go a lot higher over time.
George, great to check in with you. Thanks a lot.
Thank you.
Up next.